How are we doing today, guys? Welcome to the first video of my channel. My name is Gabriel Oliveira. I'm 19 years old. I've been trading for about 3 to 4 years now. I did want to start a YouTube channel when I first ever started investing. I did take a little bit, but I did now decide 2024 I'm going to start taking action. I'm planning on making weekly videos, kind of just a weekly recap of my dividend investing portfolio. I do also swing trade pretty heavily. That I'm debating on whether or not I also want to do weekly recaps on my swing tradings. We'll see that in the future, but for right now, I'm just going to be doing weekly recaps on my M1 Finance account. Portfolio sitting just shy of $41,000. Up in this last week, it's been a very, very good week. I'm up around 3% of the portfolio in the last week. Going through some of my stocks that I'm holding. In the week, I'm actually only down on one stock by not even 0.5%, which is going to be Mo Ultra Group. It's going to be one of my favorite stocks on the list. It's going to be sitting at a 9.23% dividend yield, extremely, extremely high. But I do also think that this is actually a pretty safe stock, even though the dividend yield is pretty high. A lot of people do like to shy away from the dividends, especially when it's this high. But I did a lot of research on this company, planning on expanding the position here in the near future. Next, TD. This is kind of just stocks that I had when I first ever started investing, and I kind of just leave it. I don't even sell out. I kind of just like to see what happens with these positions, so it doesn't really mean too much to me. Next is going to be JEPI. I am up around 1%, flat actually, on JEPI. This was JEPI Equity Premium Income ETF was the stock that actually started my dividend journey. I kind of did a lot of research on it before I started, just because the dividend yield starting off was a lot higher. They did see a little bit of cuts, which they already made nice and clear that they were going to be cutting dividends, because it was at like 10%, 11% when I started, so extremely high. But I do still add a lot of positions to it, although I did scale out of it extremely heavily. I kind of wanted to just make the most out of when the dividends were super high, waited for the cuts, and once they started cutting back a little bit, I did descale the position just to put it into other stocks. Now, my number one position, my favorite position in my portfolio by far, is going to be Realty Income Corp. That is going to be one of the biggest realty REITs, while paying a 5.16% dividend yield, which is nice and high. It is also a monthly paying stock, which is everybody's favorite. I'm up almost 2%, 1.7% on the week. 1.6% on the week. Next, I'm going to be looking at QQQX. That is going to be becoming one of my favorite. I did scale out of this a little bit. Up on the week right now, I'm up 3.21%, so it did make a nice little move, nice little jump up. That's going to have a 8.51% dividend yield. That is also one of my higher ones. Next is going to be the foundation. So this is Amazon, Microsoft, Google, and Apple. Kind of just a core little group inside of my portfolio, 17,000. So almost basically half of my entire portfolio. I like to just keep it in this just to make sure that it's nice and safe. And then the excess money I do like to throw into dividends, kind of start building up, trying to get that dividend snowball going. Everything is beautiful this week. Everything jumped up. Amazon, 6.46%. Microsoft up 5.5%, a little bit above. Google, essentially up 5%. And then Apple up 2.62%. We did see a heavy drop, a heavy drop last week, but everything flew right back up. Looking into the actual charts, I'll drag this right on over. I want every single week at the end of the video, I'm going to kind of just look at the stock charts, kind of give you guys an idea of what I'm looking for and at what levels I might be interested in buying some more shares if it starts going down. I'll start off with Mo on the daily chart. Mo on the daily chart right now is looking a little high. My my goal realistically, I do have a couple of buy orders on if it drops to 40 flat. I'll pick up a couple more shares. Right now, although I don't think it's really a bad time to buy because it could be pushing up towards these levels, I'm just not really in a rush to add any more positions. So I would pick them up at a discount, which would be, to me, $40 flat. Next, O. O is extremely, extremely high. I bought a bunch when it was trading under $50. I loaded up on the position. But right now, for me, I think it's a little high just because of the fact I already bought not too long ago. I do think if you're debating on adding positions, it really isn't a bad time. Although I do understand it's at like very, very, very high for the past couple of days. But if you scroll back, you got to see the levels that it was holding. It was right now, realistically, it's testing the old support, new resistance. It could break through and push up to 70s, 65s to 70s. So right now, it really wouldn't be too bad. You could be looking at $5 to $10 appreciation per share. But again, you got to keep in mind, stocks like this, at least to me, I'm really never going to sell unless obviously some news comes out on the company. So I don't really care what price I'm really buying it at. Obviously, if it was up $70, $75 all-time high, I would definitely be waiting. But right now, I think it dipped extremely, extremely, extremely hard because of the interest rates. Interest rates, once they start letting up a little bit, this could easily go back up to 70s, maybe even break through. Because even while everything that's been going on with interest rates, COVID, everything, O has still been signing on new clients. And then once the interest rates kind of get back to normal, once those companies refinance, they are going to, O is going to have way, way, way more cash flow. And I think they're just going to keep rapidly, aggressively expanding. So we could really be looking at new highs. So I feel like if you were to buy right now, in a couple months, maybe a year, you're going to look back and this really could be like just a dip. And then this could just be riding all the way up. Next, I'm going to be looking at QQQX. This one, I do think that it's an okay price to be buying in at, but for me personally, I'm not really in any rush to buy anything. Right now, I have a bunch of money sitting in a high yield savings account, just waiting for really to buy real dips. Like if QQQX were to dip down to like 20, 21, 20.5, then I would definitely be transferring some money and buying. But for right now, just going to keep an eye out. Jeppy, right now, is not a good time to buy at all. I do want to add some more positions to Jeppy just because I do think I scaled out a little bit too much. I do wish I had a little bit more Jeppy. So I'm going to kind of wait, see where this goes. I really wanted to dip down around 53. 53, I'd buy a couple more shares. If it were, for whatever reason, to dip down even lower, I would probably aggressively add to the position. Now, Microsoft, Apple, Amazon, Google, right now, it was a beautiful, beautiful week for them, pushing highs for Microsoft. So I'm definitely going to be staying away from that. That's just not something that would make any sense on purchasing anytime soon. Waiting for a dip on that. Now, Apple, on the other hand, Apple, I aggressively brought on the swing trade as well as on the M1 portfolio, just because right now it's at such a discount. The only reason I did read up on the news, Apple did drop heavily this week just because of the fact that iPhone sales dropped in China. Sorry, do not quote me on that. I don't know if it's China or Japan, but the iPhone sales did drop significantly. Bought the dip. I bought the dip on this first candlestick. I bought, I think, 1 or 2 shares. And then the rest of the candlesticks, I just kept buying 3, 4 shares on each stick. And then once that first green candlestick hit, I stopped buying it. And now I'm just going to ride it up. That I do not know if I'm going to be holding long term. I might actually be taking profits just because if we break 200, I'm looking at least $15 a share of profit. And I'd probably be happy with just cashing out at that. By the way, with all my charts, I do like to look at it with Heikin-Ashi candlesticks just because I like to identify the trends. Regular candlesticks, you can see it's a lot more choppy. I like the Heikin-Ashi because you can really see that trend. Amazon, very, very good. I did buy this dip last week. this entire week, we've just been looking at solid green, running on up. I do think that next week, Amazon could be breaking. They did lay off a lot of people. I did do a lot of research into that. Although that's obviously bad for the workers, it's good for the company. They did cut back on a lot of costs, obviously. They kind of realized that they could be running things a lot more efficiently. They don't need as many people as they did. So they took the executive decision of laying off a decent amount of workers, which kind of obviously they have a lot of extra money to invest right back into the company. Google, same exact thing. I aggressively bought this dip and then just rode it out this entire week. I did sell, I'm going to be 100% honest, at 175 flat. I sold out a decent amount of shares, but I did keep the rest. Kind of waiting to see what's going to happen next week. It's either going to come back down to retest, I'm thinking around 140 flat, maybe a little bit under, and then might be bouncing up to make new highs. So we'll see if it drops under 140, like 130s, 136, 137, I'll definitely be buying some more shares as well. Now going back to M1, just to take a look at any dividends that were paid. I don't think anything was paid though. Let's see, from last week to, yeah, now. Perfect. A couple of things were paid actually. Paid me $31, as well as Ultra Group paid me $80. So I'm actually $111 worth of dividends were paid to me last week. So yeah, that's essentially it. Nice little recap. Again, right now it's a little rough around the edges. I'm kind of getting a flow for this, seeing how I'm going to kind of lay this out. In the up and coming weeks, I think it's going to be a lot more smooth. I'm going to kind of have a routine that I'm going to go with, but I feel like the best thing to do is kind of just start, or else I'm going to procrastinate this channel and never actually do anything with it, and then I'm just going to be way too late. I wanted to start this when I had like $3,000 in the account, and I think it was going to look amazing to just kind of look back at it, even if it took me a year, 2, 3 years, and just see how my portfolio grew, the mistakes I made, what I've learned, and just seeing myself grow and just take you guys along the journey with me. So yeah, guys, subscribe, like. Thank you guys for watching, and peace out.